Okay, everyone, let's get going. Happy Tuesday. Happy November. Happy Halloween yesterday, 31st of October. Happy Bitcoin white paper yesterday. My goodness, time flies. 14 years ago, Bitcoin white paper was dropped, and it's been a crazy journey, I think, for the entire markets ever since. Absolutely nuts to see where we've come to over all those 14 years. We have an exciting episode today. We're going to discuss about a couple of very important things. Obviously, we're going to reflect on October. We're going to kind of go into November. I think November is going to stand into a drastic or stark contrast to October. We're going to share a few ideas around what may happen tomorrow with the Fed, what's going to happen with the midterm elections, what's going to happen with the CPI numbers, inflation numbers, what could happen to the bond market. That's going to be an essential one to understand. Fabio has shared up front that he's going to have some strong opinions about this. Obviously, we're going to reflect a bit on Elon buying Twitter. What could this mean for Doge? And yeah, I think there's a couple of interesting things. Obviously, we're going to share a few cake updates. We have some really, really nice updates also from a product side. And so, yeah, I think all over today. It's going to be a value packed episode. Fabio, how's everything on your side?
There's never a dull moment. It's super interesting times, especially what is going on in macro space, and of course what's happening with Elon. For me, it's super interesting to follow along, because I don't. Everybody knows Twitter. Everybody knows Elon. And it's kind of it feels a little bit like a hostile takeover, and he does it with a very in a very fun way. When there was this video where he walked into the Twitter headquarters with a sink, and he shared "Let that sink in." So he's just a funny guy, and like if. For a billionaire, I definitely enjoy a guy like Elon more than a guy like Bill Gates, because Elon he just brings a lot of entertainment to the table. And yeah, of course, I want to jump into what's happening with the Fed, CPI, and maybe we can also touch a little bit on the bond market. And you need to tell us a little bit about the office. I haven't seen it in person, and I think you've been there for the first time this morning.
Yeah, not the first time, but we opened everything today. So yeah, everything furnished today. I don't know. Maybe first, I don't know. What's your sense? I mean, on Twitter, I just want to comment on that a bit. I really feel since Elon has taken over last week, there's a complete different kind of toxicity on Twitter right now. I'm not sure if I'm the only one who kind of feels that, but I actually spend zero time on Twitter right now. Maybe I don't know. I feel like I post via a third party tool. I don't post directly on Twitter anymore. I don't do anything on Twitter anymore. I feel it's may have nothing to do with Elon's takeover, but yeah, just a bit strange. I don't know. Maybe I don't know sense that, but it's not. I don't know how you feel that.
There is a lot of hope and, of course, some negativity. I guess there's a little bit of two camps. One camp that is basically enjoying the drama, and it really feels that Twitter was deteriorating over the last few years, and they are like in Camp Elon. They think finally somebody is doing something, and you see a lot of posts like I saw somebody posting that the Twitter team was working on an edit button for a year. And I'm like, wow, this is like, it's a huge company. They have thousands of employees that they pay insane salaries. They must have quality people there. So how difficult can it be to implement an edit button? And a lot of other things like that they have like a sharp deadline for some paid subscription until I think 7th of November. So a few more days. And he's really putting the pressure on. And where he really says, hey, you guys are going to meet that deadline, and otherwise you're going to go. And I don't know if it's necessary. I saw Ben Shapiro had some strong opinions on the Twitter takeover. He shared a video of a Twitter employee enjoying a day working at Twitter, where she basically, it's like a spa. Like they have this great food and everything is amazing and it looks perfect, but she didn't actually work. She had like smoothies and latte coffees and really fancy meeting rooms and time to enjoy herself and nice food, but there was not. She didn't share anything about working. It was basically just enjoying her time at the headquarters. And I don't know. I guess the company grew very big and not really efficient. So I'm probably more in camp Elon, but there's definitely, of course, especially from I would say the political left, there are a few headlines that are concerning. A lot of people are, I don't know, worried about. May I elaborate maybe for 1 minute? But then
Sure.
I can bring this point home. So the the whole social media game previously when the internet started up, you had like your bookmarks, you had your favorite newspapers where you went to CNBC, you went to New York Times, you went to the Guardian, and you had these bookmarks and you were going onto the native platforms. Right now people are much more inclined to just use one platform, so they're using not really Facebook, but they're using Twitter as a news outlet. So they're following all their favorite platforms in one place. And if this one place has a certain censorship or certain guidelines, what's allowed and what is not, you have a lot of control. And Twitter had a lot of control what the mainstream narrative is and what is allowed and what's not allowed. And this is about to change, and this worries a lot of people. And I can understand why. But I guess this is a little bit of a fresh new wind. But it can also go the wrong way, you know, if this goes into being Twitter being a toxic place or where a lot of hate is voiced. That wouldn't be the thing that I would looking for. A healthy discussion is probably the best for everybody, but I guess that's also difficult to manifest. So yeah, I don't know. Do you have an opinion on
No,
how
I'm
everything is going?
No, I'm completely aligned. I think the interesting question is obviously if I were in the CEO's shoes, what would I do on Twitter? I mean, there's kind of different. It seems that one of the routes obviously is to remove the bots, to have a bit more free flow of content, and maybe that is also where a lot of that toxicity comes from. That I feel, especially the crypto accounts got a bit shadow banned on Twitter, and maybe that's exactly what I'm feeling right now, where it's just this massive friction um, with politically opposite people or ideologically different people, and that's why I just don't spend much time on there at the moment. And I think obviously that could be that this has happened since last week, and then there's this entire discussion around what should happen to verified accounts. Should verified accounts be paid accounts? How would this work? They're discussing that this could cost $20 a month, which in general I wouldn't have a problem with. I think the main problem that I see is what's going to bring the biggest value to Twitter. And and at the end, anything that brings value has to be super useful. And so, useful to whom, right? You're gonna need to have two parties here. You're gonna have the users, and you're gonna have the actual customers. The customers are the advertisers, and the actual users are the users. Now, it seems that Elon is gonna go this route to say, you know what? He's gonna unify user and customer into the same direction. That's a very interesting approach, because no other social media company does that. 100% of all the other social media companies actually go and have users, and they basically sell their data, their attention, their eyeballs to the actual customers, which are the advertising companies. And so Elon goes a bit this route and kind of unifies that. I think, yeah, I mean, very interesting, very tricky kind of approach. And yeah, so obviously he really wants to go in a route where he says, I'm not gonna charge. I don't want advertisers on that platform anymore. What I'm gonna do is I'm gonna go direct. So you are an account and you wanna, I don't know, get attention. Great, pay me for that attention. Very, very, very interesting approach. Um, the other question obviously always is, how are you gonna make sure that the other side are actual eyeballs and not bots? And I don't know. That's yeah, a quite yeah, I mean, it's a difficult kind of question how to solve it. But so as a whole, I think very interesting to kind of see at the moment. I I really hope. I mean, I'm also Camp Elon. I really hope he improves the product, improves the usability. I don't know if it's ever possible on Twitter to reduce the toxicity. I always feel like Instagram is always this happy peppy kind of platform. LinkedIn is always this kind of everyone just tries to be super professional and salesy and blah blah blah. On Twitter, everyone is for some reason always polarizing, a bit toxic. I think that's what always kind of flies on Twitter. I mean, I see this on myself, right? I see this in how I phrase the posts and the questions and so on. Um, yeah, it's going to be interesting to see if Elon ever will be able to get this away from Twitter. I think this will only get away from a platform when people are not anonymous anymore. And I'm not sure if this is what Elon really wants, because at the end, that's what makes Twitter powerful. But then on the other hand, if you really want to have meaningful discussions, you need to have ways how a lot of people can actually read this discussion, but then the actual discussion happens between accounts that are to a certain degree respectful with each other and kind of debate on a certain level. So yeah, these are just my thoughts on that takeover. I mean, one thing that is inevitable, or kind of yeah, uh, pretty straightforward, is people obviously having that hope that Twitter is going to implement a cryptocurrency as a payment service. That idea that Elon always had is X.com, that kind of that one for all app that you see a lot in China and other Asian countries. Obviously, Doge is one of the coins that Elon has said he holds personally, so it could be a strong candidate. I do believe, though, if Twitter were to implement some payment system, I think they would go with Bitcoin, Ethereum, and Doge. That would be an just an um, assumption here. I wouldn't see why he would only go with Doge. Could be, but I think it's not so likely. But if we compare that to what's really happened on the markets, then we go into the updates after I get some final feedback from Fabio. But I mean, Doge really stands out, 162% up over the last 7 days. Yeah, I mean, I've been holding Doge, but my Doge position is down. So yeah, keep pumping. That would be definitely good. But yeah, I mean, if you would look at the whole market, yeah, the last week in October really was the exception to the entire month of October. If we maybe reflect there a bit and transition a bit over, because the entire October was like stablecoin kind of crypto. And then the last week really started pumping. Bitcoin finished, yeah, for the very first time in a long time in the greens. I mean, sure, we had this month here in July, but as a whole, this is yeah, it wasn't a super strong kind of months. And then Ethereum added the most as a market cap to the entire crypto market cap. Yeah, most coins in the double digits here. Very, very solid. Yeah, I kind of wanted to use that a bit of a transition. Any other kind of final thoughts, Fabio, on Twitter, Doge? Otherwise, let's transition a bit over to October and kind of a bit of a reflection and talk a bit about cake. But I don't know what else you have.
Yeah, I'm following it with great attention. I love the platform. I use Twitter every day, both for my work and personally. I found a lot of value in it, but I also see the shortcomings, especially the bots. And I'm not looking at it from a company perspective, but from a user perspective. And there's definitely a lot that can be improved. So I would love to have an edit button. I would love to have a subscription model. I would love to see the bots go. There are two interesting things that I'm excited about, or that could be exciting, is if there would be a model where a content creator actually can make money by using Twitter, like similar to YouTube, where you actually, get paid for the eyeballs that follow your content. I know that he had a comment he's like, my whole Twitter feed back basically just Elon. Like, I just see Elon replied here, Elon tweeted this, Elon replied there for a few days. And the other thing is, I think Saylor had a good take on what could be done against the bots, and I think he calls that green check mark, orange check mark, and blue check mark, where he where you deposit Dogecoin, Ethereum, Bitcoin, basically as a sort of safety deposit, not really a
Yeah,
subscription
staking. It's
model.
actually staking. Yeah,
Yeah, it would be
yeah, it's
a
staking.
proof of stake.
Yeah,
Yeah,
it is. Yeah,
100%. And this would be super
I mean,
interesting.
there's nothing else, right? I mean, if you think about a blockchain, there's nothing else. In a blockchain, what you want to avoid is that there's trillions of bots taking over 50% of the consensus, right? And so that's why Satoshi 14 years ago established proof of work. We could do the same on Twitter as well. I mean, in like if you want to make a tweet, you have to make a small kind of calculation. You could do exactly the same, or you would just have to stake something. So, sure.
Yeah. But that's it. So we can move on to what November has in store for us.
Yeah, reflecting on October maybe first. Let's do that, and then let's talk about cake, and then move into November. Because I think that's a really nice transition there. How do you remember October?
It's boring. It was super boring. There is this sense of, so one thing that you previously mentioned is I'm not 100% sure if it's shadow bans. It feels like it, but in the whole of the crypto space, like we touched on that previously, big accounts like, I don't know, Plan B, Benjamin Cohen, Bitcoin Magazine, or you name him. If it is an account that is mainly tweeting about crypto, the interaction is down 80 to 90%, where big accounts used to get 10, 15,000 likes on a tweet. They barely get 1,000 right now. And why that is it because it is a bear market and people are doing other things? They're just not interested. Maybe it's something to do with the algorithm, but and the same with price. We're moving sideways since, I don't know, July, mid July, or no, mid June actually.
Yeah, mid June.
And it's super boring. Everybody, I saw a video on Ivan on Tech, or a short clip, and he called it some kind of Swedish word for buffet, where he said, "Hey, the buffet is ready. Everybody can see the food, but nobody is really willing to take it. The host has not opened the buffet yet." And with the host, of course, we mean the Fed. So there's a lot of money on the sidelines. Everybody's waiting. Everybody's anticipating. Everybody's waiting for a pivot. And you can see a few key stats. Like, for example, one ratio that I'm looking at is the ratio stable coins to Bitcoin. And it's never been as high as it is right now. We have so much stable coins, and this practically means money on the sidelines. The only reason why you really hold stable coins is because you're anticipating, you're waiting. Because when you cash out, you're probably not holding these assets for a prolonged period of time in stable coins. So there's a lot of capital on the sidelines waiting for risk to hit it off again. I think we're both aligned on that. We are both expecting volatility in November,
Yeah, I mean, for
to
sure.
either one side.
100%, for sure. And I'm gonna disclose a bit on into what side. If I would have to make a binary bet, so I couldn't do probabilities, but I would have to do a binary bet. I'm also gonna disclose what I rather think for this month, maybe also December. We can discuss this a bit. I think a nice transition. Let's first cover a couple of topics that are happening in our company. First and foremost, we've covered this a couple of times. You should check this out on LinkedIn or on Twitter. We moved into our new office just today. I mean, we got the new office. I think we signed the lease 2 months ago. It took about 2 months to kind of renovate everything, get everything in. The office is right next to Raffles Place in Singapore, so really downtown in 20 Cecil Street, 18th floor. We have the entire floor. The office is the actual building is the Plus building, so the location itself is very downtown, but the building itself, I would say, is not prime location, which was intentional because I do want us to kind of have something else to strive for as a company. We have now 155 employees. About 100, a little bit over 100 are in Singapore. The office can keep around 150, 160 people space. So at the moment, it's super comfortable. Over the next year, 2 years, we're definitely going to be stacking people in there. And yeah, we're really looking forward to that. It's always, I think, a big step to kind of have your own office. Obviously, very strong commitment, and yeah, also great for the team building and the bonding for everything. So yeah, if you're in Singapore, maybe also for the FinTech Festival this week or whenever, drop by. There's always a coffee for you waiting, always a nice drink waiting. Yeah, and yeah, you see how we operate here. So I think big step, and everyone is really, really excited about this. The other big thing this week is Singapore FinTech Festival. We are launching our B2B solution there. The team has been working on this pretty much the entire year. It's going to be access into DeFi for institutions. It's going to be multi-chain, so not focused on a single blockchain, but it's going to be multi-chain. And there is not a single other institutional product out there that can do what ours can do. It's really end to end, and yeah, we're launching. We're presenting this week. Launching this, we already had a closed lunch kind of round yesterday. Yeah, it's going to be quite exciting. Obviously, we're going to publish this or post this to the entire world a bit later this week, and then more and more next week. But so if you're watching this and you're B2B, this is definitely interesting. There is no other product that works this way. So that's quite exciting. Yeah, we're there with the booth Monday through Friday. Also, I will be speaking on Friday morning, and then for panel discussions in the afternoon. So I'll be there on Thursday and on Friday. I'm not going to be there tomorrow because I actually need to get some work done in the morning, and then I have meetings in the afternoon. But Thursday and Friday I will be there. But the team is there Wednesday through Friday. So obviously that's the second kind of big thing for the entire week. Two other things I want to post here. First, transparency report is going to come out a bit later this week. So end of the week. Maybe the highlights here. We did have a slight negative operational cash flow for the first time actually in over 2 years in Q3. But because of our treasury and because crypto prices slightly trended up, we did have at the end a positive P&L. That's really nice. We do have about 5 to 8 years of runway in our entire treasury, even if we wouldn't make any money right now. So we're doing fine. We want to definitely get back to being cash flow positive in 2023. I don't think we can do it in this quarter unless the crypto prices really go up. I mean, if crypto goes up, then sure. But let's see. Q3 was the strongest quarter for us adding customers. I had mentioned this a couple of times. We benefited greatly from a lot of the collapses that happened at the end of Q2. So, I mean, yeah, July, August, September was just growth-wise incredible. We're going to be launching a really exciting new content strategy. More about that a bit later this month. You're going to be, as our user, fan, follower, you're going to love this. I can promise that. So, yeah, that's going to be great. And then, yeah, I think last but not least, we're still hiring. We're one of the few companies in the world, I think, that are still hiring. We're not firing. Obviously, we do let go of people that are underperforming, but we are growing and we're adding people. Yeah, and if you want to look for what's out there, go to cakedefi.com/jobs. We would love to see how you would fit in. We do mainly hire here in Singapore, but we do have roles that are remote as well. And last but not least, and then I don't know, Fabio, if you have anything that I'm missing, I hope you have checked out our Halloween campaign, Cake Busters. There's these 5 ghosts with the special letters. And if you collect these letters, it turns into a word. And then you can fill in this word. And we have a really cool gift for 5 of you that is going to be a very exclusive sweatbox that we're going to be handing out. You're going to love that. So I hope you check this out. Just go on Twitter or Instagram or LinkedIn or Facebook, and then you should see this and then participate. These are a bit of the kind of key things at the moment. I don't know, Fabio, what's from your side that you see in the community or things we need to add before we transition into November?
Yeah, so on the community side, it's boring. It's really boring. We usually, or at least for me, when there is not a lot of volume, especially in our Telegram chats and on Reddit, it means everything is working. Usually people come or flock to Telegram or to Reddit when something's not working or they're concerned. And right now our volumes are super low. General interest is low. So that means it frees up a lot of time to build, to work on other things. And that's exactly what we're doing. We're planning on finishing the year strong. We briefly touched on a few things. Julian just mentioned some other things. So multi-chain is one of the focuses, and we are going to push out quite a lot of things before the year ends. So yeah, I'm excited, and I'm making good use of the time.
Yeah, it's gonna really go bang, bang, bang now. Yeah, I looked at the remember looked at the content calendar and release schedule. And I'm like, whoa, it's gonna be 1 week after another, bang, bang, bang. So yeah, team been really coming together. We feel the yeah, I think senior leadership, the heads, VPs, everything is really solid now. So it's good. I'm really, really happy about that. Um, Great. With that, let's kind of transition. Let's look into what's ahead. I think three real major events in November. And the first one is happening right tomorrow here. Fed meeting announcement is going to be at 2 p.m. Eastern Standard. So that's 7 p.m. in Europe or 2 a.m. on Thursday here in Singapore. And we're going to look into this a bit more in detail. The next thing is going to happen November 8th. That's going to be basically today in a week. So Tuesday, it's going to be midterm elections. We're going to look into that. And then November 10th, we have inflation numbers for October. Obviously, shortly after, we have the Fed meeting minutes, and that's going to be absolutely essential, especially when we're going to discuss what we could be expecting tomorrow. But all these three events are gonna cause, in my opinion, major, major turbulences in the general markets, in the crypto markets, in commodities, in precious metals, bonds. Doesn't matter what you kind of talk about. We've seen this a bit over the last 3 4 days. It's also a bit of the reason probably why markets have been well all over to a certain extent. Down 1% yesterday, up again today. So it's been all over. One major kind of thing here has been the dollar, in this case, the Dixie, the dollar index. It's been actually trending down the last week of October. It's also the reason why crypto went up at the end of October. So if you're wondering why crypto went up, this is the reason. And why it corrected a bit then in the last 2 days is also because the dollar, again, bounced a little bit. And so all of this actually has to do with one major event, and that is tomorrow. Jay Powell coming out and having a couple of announcements. And the question obviously is, what is this announcement going to be? The markets are expecting an interest rate hike by 75 basis points. At the moment, we are between 3.3% and 3.25%. So markets are expecting that we are seeing a 0.75% interest rate hike. The key thing on all of this, right, and this is where this turbulence is also coming into the dollar, but in general, there are a couple of things. First of all, I don't think many participants are doubting that tomorrow we're going to see a 75 basis point hike. I don't know, Fabio, do you see anyone doubting this before I continue, or is that that's mostly expected? Or do you see anyone that thinks it's 50 basis points or 100 basis points?
No, I would say the 90-10 ratio that is also visible on the screen right now on your end is probably also reflected in the community. And a large majority of people actually think it's already priced in.
Yeah. So that's gonna be that's the major expectation. The key thing on tomorrow's announcement is gonna be the reading in between the lines. It's gonna be what's happening in the future meetings. So mid-December, December 14th, and then the end of January, beginning of February, actually on February 1st meeting. And here are a couple of things. First of all, we do see a little bit of turbulence in the short-term bond market. The long-term bond market, not so much, but the short-term bond market seems to be struggling a bit with liquidity. And this is obviously a key kind of indicator that the Fed looks for. Remember, we always mention this, key things. Repo markets, which are overnight kind of rates, at the same time, short-term liquidity. Second thing, real estate market. Even though prices are disastrous in the real estate, I think at the moment the Fed does not so much care about this. Obviously, inflation numbers, we're going to cover those. Also, unemployment numbers. Unemployment numbers start to weaken. So all of those things actually may signal, and let's see what Jay Powell comes out with tomorrow, that these very bearish future kind of hikes. So kind of keep this in mind. So basically, at the moment, the market would be pricing in, let's say, 3.75%, another at least 0.5% in December, maybe even another 0.75% in December. Actually, that's a key thing. 95% of participants are expecting, or 90% of participants expect more than 0.5% rate hike in December. And then if we go to the end January, beginning of February, same thing again. So here, as a case, let's say we're at 4.25. So that means they're expecting another at least 0.25% hike in February. So that is absolutely crucial. And looking at all this, there may be a strong chance that the market is way too careful right now, way too hawkish right now. Maybe that the Fed comes out and says, yeah, look, we really want to get that soft landing. We do see some issues in the liquidity in the short-term bond markets. Obviously, Jay Powell will never come out and say that they will see issues, but you have to read between the lines, and that's going to be up for interpretation. And that's why, in my opinion, we're going to see this massive volatility tomorrow and then in the days after, because obviously we don't know what did he really mean. It's going to be a speech, and we don't see the exact details, right? It's also going to be interesting to see how unanimously is going to be something like this approved. Are there Fed officials who maybe don't see it as unanimous and they see it, hey, no, actually we should have done less, so we should have done more, right? And that signaling is going to be so essential, because obviously if I mean, we discussed this last time. This could be the last rate hike that we actually see in this kind of cycle. And there's a few people who believe this. And if this is kind of the signaling, markets will rally massively, especially into the year end. Obviously, I think at the moment, the question really is, what would have the signaling be for it to be really bearish? Because I do think markets are generally really bearish at the moment. They have priced in the majority of the negativity, the majority, not everything, the majority. And so that's going to be a really, really key question. I'm not sure if the Fed can actually do something tomorrow other than a really unexpected 1% rate hike, but I don't think so. Or an unexpected super bearish statement where Jay Powell is like, hey, look, 0.75 today, and we're probably going to do another 0.75 in December, and it's probably going to be a zero point 0.5 end of January, beginning of February. Very unlikely, but I am not sure the Fed can actually do much in order to really tank the markets more. So again, if I have to do a binary bet here, I wouldn't have any probabilities. So again, I don't think it's as binary. I think it's more of a 65-70% kind of chance. But if it's pure binary, I actually do think we're going to see markets rallying by the end of the week. That's a bit of my view on this. Fabio, what are your thoughts? Bonds, short-term issues, Fed, when are they going to give in? When are they going to pivot? Share a few of your thoughts here.
Yeah. So sometimes it is hard to see where the pain actually happens. And if you were like me, or you've been into markets maybe for 10 years or for 15 years, it's hard to see how painful the current situation is. But just look at where is the majority of capital? Who holds the majority of capital? These are baby boomers. And the classic, and I'm generalizing here, but the classic baby boomer has something that's called a 60-40 portfolio. So they own usually 60% bonds, 40% assets. And you won't believe this, but a 60-40 portfolio had the worst performance since 100 years. They had a downturn of 34%. So if you're a baby boomer, you're 58, you're 62, somewhere like in your last years, and all of them, of course, want to go into pension maybe a year or two early. They saved a lot of capital, they built up their capital, they invested it in a 60-40 portfolio, and now a few years before they go into their pension, they have a downturn of 30%. They lost 30% of their assets. And not only that, a lot of them, they hold cash and they hold a 60-40 portfolio. Both of these assets, they suffered. And right now, if you just compare, that there are some minor cracks in the glass. So if you listen, for example, Janet Yellen, she said she's concerned about the liquidity in the treasury markets. You can really see short-term treasuries fluctuating a lot, like yields going up, yields going down. You can feel sort of a storm brewing. And nobody can tell when something is going to break. And I'm under the impression, this is my personal opinion, dubious speculation, but I generally have the feeling that treasury markets are the thing that is going to break first. And where and how, I don't know. Maybe it's going to be with the next pivot, the pivot or the one after that. But you can really see a few things happening. So if the Fed is continuously raising hikes as they did, so Jay Paul, he said he's going to do it. He did it. But when you look, for example, at the other major central banks worldwide, like Bank of Japan or the ECB, if you don't follow the course, if you're not doing the same what the Fed is doing, your currency is dropping off the map. You need to follow course. And the ECB, they went, I think, from 0.25 to 0.5, and now they're doing another hike. So they are trying to follow, but they have a very different situation than the US, because they have a lot of sovereign debt and they cannot control the whole monetary union. It's very difficult for them. Same for Japan. I think Japan has already given up. They're not going to they're not going to increase rates. They're doing yield curve control. So they're like they have already given up. But right now, so what's changed between the last 10 years, let's say since the great financial crisis, is if you are holding bonds, if you're holding treasuries as an institution or as a country or even as an individual, you were, over the last 10 years, you were 100% sure there was this buyer of last resort. The Fed is going to buy it. If you sell it, the Fed is buying it. And this changed. There is no longer a buyer of last resort. And a lot of countries, like, for example, Japan, they are dumping US treasuries to support their own currency. So they're selling off their own bonds and buying Japanese yen to keep up the value of their currency. So they are a seller, and the Fed is not there to buy that. And of course, this cannot go on forever. It's so hard to say when things are going to break, when things are going to change, when the Fed is going to pivot. But I feel the longer we go, I feel kind of bullish. I feel we are very close to a bottom, because if you look on Twitter, it's devastating. It's bearish out there. 70 to 80% of crypto participants are bearish. And I could foresee a scenario where we are seeing, or that the bottom is already in, or that we. So you mentioned the two key dates that we are going to see tomorrow and next week. In my opinion, there is going to be a lot of volatility. To which direction, I don't know. So I'm not going to trade that, and because usually it's very unforeseen. It's probably going to pump or going to dump on the minute that they are announcing the rate hike or whatever they are announcing. And it's probably going to follow up in the other direction. So there will definitely be some volatility. But yeah, I kind of turn a little bit bullish the longer we go.
No, I'm aligned there. I mean, I think we have mentioned this a couple of times that we're probably going to see a bullish H2 in comparison to H1. So for the second half, better than the first half. It's not. I don't think we're going to see a bullish 2022 as a whole. But until the end of the year, I think there's a strong chance for an end year rally. I don't know. I think we've mentioned this so many times here now. It's also the reason why I rebalanced in July and August. These positions are all up, and I had we had discussed this a lot here. I do agree with you. I think at the moment, I think we are seeing this point now with this Fed meeting where actually probably for the first time the expectation with the Fed is too pessimistic. In all the other meetings, I think everyone was too optimistic. But now, for the very first time, in my opinion, we are too pessimistic. And that's very, very interesting. Obviously, remember, markets tend to price in events that they are expecting to happen as if they had happened. This is key. This is really, really key to understand. So if tomorrow Jay Powell comes out, talks about 75 basis points, and then is a little less pushy about, hey, we're going to need to get rates up again in the other meetings, the market may really rally. If, on the other hand, though, he's going to be super hawkish, we may see a little bit of a dip down, but it may not be so bad. It may be that we're going to see 75 basis points, market dumps 2-3% first because markets panic, Then they realize, hey, this is priced in actually, and actually it wasn't so bad. Jay Powell is actually quite optimistic because remember, it's an entire speech, right? So the markets are going to be super, super, super kind of emotional around this time, right? And so they try to kind of deduct anything out of this. So we may see 3% down, 3% up in the same kind of trading session. So you have to be super, super cautious. There is, to me, a strong chance at the moment that we are seeing a nice year end setup. And I want to give you another point here. Let's talk about inflation numbers. We had covered this. Obviously, we're going to see this only in 9 days. But we had mentioned a couple of times that inflation actually has a very high chance of actually coming down, maybe even becoming deflationary by the end of the year, beginning of next year. And I mean, let's see, we see the October numbers. And if this inflation number now comes down, this is, and I think there's a strong chance for that. Um, this can be a very strong kind of indicator for some rally. But the other thing I really want to point out here, because that was the third event, but the second event is going to happen next week, and that's going to be midterm elections. Midterm elections are going to be very interesting for one specific kind of characteristic about those midterm elections. Obviously, during those midterm elections, the entire House is gonna get voted on. I think what is this 452, or I never know how many seats the House has, but I think in total 452 seats are going to be voted on, and a third of the Senate is going to be voted on. Now, remember, at the moment, uh, both the executive, which is the president, in this case, President Joe Biden, and the legislative kind of section of the government, which is in this case Congress, so that's the Senate and the House, are all dominated by the Democrats. And it looks like that the House is definitely going to go towards the Republicans, or very, very, very likely. And the Senate looks like a tie at the moment, but it has been shown that when there's a tie, that generally the Republicans tend to be favored just because a lot of those polls, a lot of the media tends to be favoring a bit the Democrats. So there's always a bit of a bias in there. So at the moment, actually, Republicans have over a 70% chance to be controlling Senate and House after the midterm elections. Now, why is this interesting? It is interesting because, first of all, this means that once this actually gets executed, which is on the 3rd of January, so in about 7, 8 weeks, you can expect that there's kind of this deadlock for the next 2 years until the next presidential election. Then we need to see what happens there. But you can just be assured that, I mean, look how divided the US is right now, right? So you're going to have Republicans fighting Democrats. Joe Biden is going to get impeached one month after another. Whatever Joe Biden tries to do, the House and the Senate is going to block it. Whatever Senate and House is trying to go through, the president's going to try to block it. There's going to be executive orders left and right. So it's just going to be, in my opinion, a massive shit show over the next 2 years. But what you generally tend to see is if there's such a major flip, obviously right now, they can still get a lot of things through until the 3rd of January. And at the moment, the Democrats still have a lot of things outstanding that they would love to get done, especially a lot of some of the stimulus, some of the support. So a lot of the things that are obviously for the economy, very stimulating in the short term and very questionable in the long term. But so this could actually mean that there's just a lot of fresh capital coming in until the end of this year, simply because the Democrats just kind of want to get through with a lot of things that they are fairly certain that they're not going to get through in 2023 and 2024. So that's going to be super interesting, super relevant. And if you actually look up the statistics on that, there's a very, very high probability that in such a scenario, we're going to see not the nicest years in 2023 and 2024 when it comes to the economy and the stock market and so on, but we may see a very, very, very nice kind of end year rally. And so to me, all of this right now, that very hawkish expected Fed that may not be that hawkish anymore, inflation numbers that may actually be better than expected, and this weird constellation in the US government is going to be, in my opinion, actually just playing into all our short-term investor kind of ideas until the end of the year. Now, obviously, it's a totally different discussion for next year, and I think I've mentioned this a couple of times that at the moment, I mean, November 1st, I would be a bit more cautious about next year. Remember, we do have the tech companies that are actually not hiring, rather firing. We do have housing. We do have this, maybe we even have Congress really blocking the president and really kind of, making the US bankrupt. I mean, not actually bankrupt, but incapable of paying for a certain period of time. And this is going to cause quite some shock next year. So these are really some thoughts here. Very bullish for me right now in the short term. Questionable 2023. Fabio, your thoughts?
Yeah. So on the midterms, I fully agree. The chances of the Republicans sweeping a lot of seats for their side very likely. And I'm not very political, but from an investor's perspective and from somebody that's in crypto, I would rather have a house, a red house, so a Republican house, because as you said, if the Democrats are in full control, they can push a lot of legislation through. And the Democrats are they're against proof of work, they're against free market capitalism, and for crypto and for investing, Republicans are usually a little bit better, especially if there's not a consensus in the Senate. If they have it a little bit difficult to push through questionable or crazy things, that's probably good. We're not going to get any, a crypto ban or a DeFi ban or a proof of work ban. All of these things that a lot of the community members are concerned. If they're not happening until January, beginning of January, they're probably not going to happen within the next 2 years. So that's at least my opinion on it. When I said earlier that I'm bullish, maybe I need to double down or explain a little bit, because I'm expecting stagflation. I expect a sideways movement, not real economic growth, and I expect inflation to be around. So, just to put this in numbers, maybe we are going to finish the year on the levels where we are right now, maybe slightly lower, maybe slightly higher. But next year we're probably going to still have 5 or 6% inflation. And not a lot of economic growth, but I'm not expecting a dump and I'm not expecting a pump. I expect some sideways movements, maybe some volatility in between, but neutral with high inflation. And that might be for the whole of 2023, or that's at least my expectation for the next year, which is stagflation is the worst environment to be in as an investor, because you have no place to go. You suffer everywhere. Because when risk assets, so the Nasdaq and the S&P 500, when they're not performing better than inflation, you're losing money. And there is during stagflation, it's really hard to hide and it's really hard to invest, and you get lured into these fake rallies, into these hope rallies where they sell off again. And especially for inexperienced investors and investors with a short time horizon, these times are super difficult to navigate. So for me, it's probably going to be pretty straightforward because I just buy and hold. I DCA and I took care of my personal finance. I have some cash on the side just in case my wash machine breaks or my car or anything. So I don't need to tap into my investments. But I'm not expecting an easy time next year, and for a lot of things, so our user base and also the people that are following us on YouTube and on Twitter, I know for a fact that you are all in my demographic. You're around 30, you're male, and you probably have exactly the same issues that what I have. You've been into the workforce since approximately 10 years. You probably saved some money. You did some investing. You're probably looking to buy a house in the next few years. At least I do. And it's super hard at the moment because house prices are extremely high. The costs associated with a house, so, warming it, maintaining it, they increased a lot. And now we are probably going to see, so here in Europe at least, we have interest rates approximately a little bit lower than 2%. In the States, the hypo interest rate, so if you want to get a mortgage, they're approximately 6% right now. If you're buying a house that costs $1 million with 6%, you're not going to be able to finance that. So there is this weird time in between where the house prices are still high and the mortgage rates are coming up. So it's super hard, not only for how to invest your money, how to keep your money, but also how to set up your life for the income or the strongest years usually are between 30 and 40. I'm not 100% sure how my generation will experience these the coming next years. It's definitely tough, yeah, to say the least.
I mean, 100%. And again, I think we mentioned this a lot on the show. Cash flow is king. No matter if you're investing in stocks or in crypto or whatever. Yeah, it's essential, and I do agree. I mentioned this so many times. I mean, we missed our anniversary. Actually, I wrote it down. It was mid October. That's when we did an entire year of yeah, these shows on a weekly basis. So we started a bit over a year ago. It's 13 months now. We missed our anniversary on this. But yeah, I think we mentioned this at the beginning of this year, where we said, I think the last 10 years were probably way easier to invest in the next 10 years. And but that is always kind of tied in, right? That's always kind of connected. It's always waves, always goes up and down. And I think at the moment it's just a good time to really focus on quality, be diversified, get cash flow. Don't make too drastic, crazy bets on one belief, simply because I'm not sure if you would have really been so right on all these bets over the last 12 months. I think we would have all gotten completely blindsided with one bet where we totally got an unexpected kind of turn of events. So just be careful there. But then, yeah, it's those times, right, that kind of build that robustness. And then when we all come out of this, and we will always come out of this, that's also key. It's really those who didn't get wiped out. It's those who still have seeds in the ground that can then go through spring and summer and then fall, obviously, and then kind of harvest. I think that's always key. Yeah. Um, yeah, Fabio, anything from your side? I mean, that's it from my side, but I don't know what if there's anything kind of left to say from your side.
The only thing that I would love to add is if you're following us in these Twitter spaces, thanks for being here and keeping up with all the news that we are sharing and with the value we are trying to provide. For us at Cake, or for me, I'm speaking for myself, we are in a very fortunate position. If you look at the market, how the market looked a year ago compared to right now, if you would make a list of the top 10 companies that are competing with Cake, the markets look very, very different right now than they were a year ago. So a year ago, I would probably have said that Cake is number 5, maybe number 4 on that top 10 list. Right now, we are probably number 1, just because of amazing risk management. And here we are. It's, of course, there's a little bit of luck involved, but
Always.
always. But we did especially we did very well with treasury management, and that's mainly due to our finance team and Julian's involvement there. And the second thing is we did especially great in risk management, because almost the whole industry fell for the same thing, the same player. It was practically one big player everybody fell for, and we didn't. And right now we have 2 or 3 things going for us. We have a runway for more than 5 years. We have a great team that we built over the last 2 years, and we have the best setup to go into the next bull period. We are affected by the current market conditions, as Julian said previously, and as you will see in our transparency report that we are sharing later this week. But it's the base camp that we are building right now. It's not the first base camp, it's the second base camp. We have a head start going into the next cycle. And I'm really excited working for a company that has time in these market circumstances to build and to get ahead. We are already a little bit ahead, but we're going to get a lot further over the coming next, let's say, 6 months, 18 months, because we have the capital and the team, and we can build. and we will start strong into the next bull phase, and there will be a next bull phase. I'm 100% certain about that. So maybe that's the only thing I would love to add. Yeah.
I love that. Nothing else from my side to add. So hey, thanks so much. If you are following us on Twitter here, then yeah, obviously follow, like, retweet on YouTube. Please subscribe on the podcast, follow, and then yeah, leave us a comment, a positive review. Obviously, spread the word, and then tune in again next week. So with that, thank you so much. Let's see what November may bring. Tomorrow, let's start the craziness, November 2nd, and then yeah, it's gonna be what a show. So lots of fireworks. Let's see. All the best. Stay healthy, Fabio. Thank you so much, and hear you next week, everyone. Bye bye.